Welcome back. Here with us on Urban Debate on Mirror Now. After the Reserve Bank of India increased the interest rate by 0.4%, SBI's Economic Research Department has released a report. The report says that consumers must brace for more rate hikes going forward. To talk to us about that particular report and the forecast that has been given by the research wing of India's largest public sector bank, State Bank of India, I have with me the Group Chief Economic Advisor for State Bank of India, Dr. Kanti Ghosh. Dr. Ghosh, thank you very much for joining us here on Urban Debate on Mirror Now this evening. Good to have you on the show today. Be honest, after this off-cycle policy meet, the way RBI decided to increase repo rate by 40 basis points, were you surprised? Did you anticipate something like this yesterday?
No, I think all of us were anticipating a rate hike in the June policy. But I think the central bank may have also, but we were also expecting that the April CPI print could be significantly on the higher side. It could actually, as our reading suggests, it could be even in excess of 7.5%. So possibly the RBI could have actually second guessed that the inflation could have peaked in the month of May. And so therefore, I think it went for an off-cycle rate hike. So just as to ensure that there is no panic in the market if the inflation prints comes at such a high level. But generally, I think maybe this rate hike is front-loaded. And of course, it's a surprise to the market. But as we say, I think monetary policy always works with unanticipated surprises. So that may be one of the reasons why these rates were hiked in the month of May in off-cycle.
Now, as per your report, Dr. Ghosh, you're expecting another 75 basis points hike in the next 10 months of the current financial year. What does it mean for an EMI pair? More mehengai?
The EMI, of course, will go up. And why you are factoring in another 75 basis points? Because yesterday, if you look at the governor's statement, he clearly indicated that this 40 basis point rate hike is actually going back to the pre-pandemic level, because in May 2020, the RBI had cut rates by 40 basis points. And in March 2020, if I remember, it had cut by 75 basis points. So if you have to go back to the pre-pandemic level, you have to increase rates by 115 basis points. So 40 of which has already been done, 75 remains. I think there could be rate hikes in the June policy also, there could be rate hikes in the August policy, and then the RBI could actually sit down and visualize the inflation trajectory and take a further call. But the point to note over here is that, I think that's important, is that, I mean, earlier what used to happen is that now 39% of the bank's portfolio is actually linked to the external benchmark. So repo is one of them. So if repo goes up by 40 basis points, since it is completely external benchmark, your rates will also go up by the same proportion. So therefore, monetary policy, as all of us know in economic literature, there is a lot that it works with long lags. Basically, whenever you take a decision, it transmits to the economy over a point of time. But this time, what is going to happen, since the transmission will be immediate, I think the impact also will be immediate. So rates actually could rise faster. But if inflation stabilizes at lower levels, maybe 6 to 7 months down the line, the RBI will always have scope to readjust the rates because it looks for, because as an inflation targeting central bank, its job is to anchor inflationary expectations. So I think from that point of view, yes, your EMI will go up. Yes, the rates could go up by as much as 75 basis points this year. But the good thing is that if inflation stabilizes, there is always the scope for downward adjustment at a future.
Now, is there any calculation that you have through which you can explain to us how much of a pain should the EMI pair be prepared for if this 40 basis points is immediately passed on?
You can just calculate, for example, on 20 lakh, if the interest rate is basically 7%, and so basically on 7% on an annual basis, and if it moves up to 7.40%, so we can actually calculate. So 7 lakh, 7% of 20 lakhs is basically 1 lakh, I think around 1,40,000. So now, and if you add another 7.40 to it, so basically you can now calculate that it could actually go up by around, say, maybe another 5,000, 6,000 rupees. So there would be an impact on the person in this case. But it would vary from bank to bank and the interest rates. So that's the important point. So it's a very straightforward estimation. You have your overall loan portfolio, you get it at 7%, and now we are getting at 7.40%. So you have to just, the impact will be exactly in the same proportion as your repo rate has been increased.
Now, will this hike that we have seen from the RBI coming yesterday be enough to tame the current levels of inflation, or do you think the RBI will have to be more aggressive?
See, it's difficult to say, and not all these statements are behind the curve. I think with this rate action, RBI is actually front-loaded. The rate action is ahead of the curve. So that's why this surprise rate action in the month of May. Fed yesterday has raised rates by 50 basis points, but Fed guidance also shows that may not be aggressive rate hikes, may not be the case, but they will continue to hike rates. So the same is the case of RBI. If inflation continues in more than 7%, which we believe it could now be more than 7% for almost all the months from April to September. In that case, I think more rate hikes could be in offing, but mostly these rate hikes, as I see today, will be front-loaded. So basically, the cycle of rate hike will happen in the first half of the current. Since RBI policies are in June, in August, you could see successive rate hikes, and after that, as I've said, the RBI will take a stock and decide how to continue with the rate hikes, whether in the same magnitude or in smaller magnitudes. But at least for the time being now, we have to be prepared for successive rate hikes as given in the forward guidance of the central bank.
And Dr. Ghosh, by when do you see inflation coming down?
Inflation actually should start coming down in the second half of the current fiscal. We're in the month of May, so you can actually see some couple of months. Maybe after the month of September, you could try see the inflation coming down. But there is also an uncertainty over here because the war has now got prolonged by more than a month. So, and it's still continuing. If it continues for one more month, so basically in that case, the path of inflation could actually be different from what we are seeing today. So in that case, the inflation numbers could actually start coming down more towards the end of the year. So all these are actually we're in a state of flux now, and everything depends on this geopolitical conflict and other results. Because if oil stays at this level for longer time, I think that too is going to create problems for the overall trajectory. And food has a 46% weightage in the overall CPI basket. So if food prices remain higher, and you can see that all food prices have gone up, edible oil prices are going up, then protein items are going up because the feed which we import from Ukraine has got disrupted. Cereal prices have been going up. So there is also an element of food price increase. So I think if we combine all of them, very difficult to say when it will start coming down. But my sense is that, towards the second half, we could see some meaningful decline in the inflation numbers.
And for helping people get immediate relief from these high inflation levels, what do you suggest on fuel that also seems to be fueling inflation? Every time we talk about high fuel prices, there's blame game between center and states. Do you think bringing it under GST, the fuel tax, is the only way out?
Yeah, but that is fine. But one thing I would like to just point out is that the interesting point is that if we actually look at the CPI inflation data right now, it is food prices which is driving the inflation. Because the reason is that because of the high oil prices, there has been some curtailment of demand. Of course, there is fuelage and weightage in the fuel is still contributing, but food actually has taken over in the last couple of months. But having said that, if you ask me what needs to be done, I think India is a country with one country, one tax. But oil is a commodity which is taxed differently by 39 states in India and also the center. So at some point of time, there should be some thought of bringing GST bringing fuel under GST. I think states, of course, will be a little bit reluctant to do it because that is a source of revenue. And after GST, they have freedom of some of the items. Oil is one of them where they can actually adjust the prices. But here also the issue is that if you bring GST, if you bring fuel under GST, there is also this input tax concession, which the amount is not significantly lower, which is around 20,000 crore or so on. So that is also another revenue the government will have to think of, because that will be also a revenue loss. So overall, ideally, fuel should be under GST, and we can think actually of thinking about a timeline maybe over the next couple of years. As we can see right now that the GST is stabilizing at a rate which is higher than 1.5 lakh crore. So if the GST rate stabilizes, then the government and a state government can actually think of bringing about some changes in the structure of the fuel, because that will be good for the economy, that will be good for the country, and that will be also good for all the states.
Thank you very much, Dr. Ghosh, for joining us here. It was a pleasure listening to you, because Dr. Ghosh is from State Bank of India, the largest public sector bank, which today serves around 45 crore customers, and SBI listens to him. So for us, it's very, very important to listen to what he has to say about the rate hike scenario going forward. Be prepared. Your EMI bill is going to shoot up from here on. With this, it's a wrap. Thank you very much for staying with us here on Urban Debate on Mirror Now this evening. Heading into a short break. Griha joins you next. Stay with us.